I am the first reporter of the Chapter 7, and so I am going to talk about the sources of short-term capital. What is short-term capital means? A short-term capital gain results from the sale or profits you make from selling assets you've held for a year or less. So, ang short-term capital means mao na siya ang imuhang na-gain nga profit sa imuhang gibaligya or nabaligya for a year or less. The total business finance function is composed of 3 segments. First is short-term financing, second is intermediate-term financing, and third is long-term financing. So, what is short-term financing? Short-term financing means taking out a loan to make a purchase, usually with a long term of less than 1 year. So, ang short-term DI is nagpasabot sa pagkuha og long-term na ubos sa kanang usa ka tuig. So, akong example ana is kanang one puhut from the world itself, puhunan. So, unsa may purpose nga musud ka ana nga loan. So, ano siya kanang ganahan ka musud ana nga loan kay para nakay puhunan sa imong negosyo or sa buhaton sa imong konta. So, intermediate term financing, these loans generally run between 1 to 3 years and are paid in monthly installments from a company's cash flow. So, ang intermediate term financing is kanang tagabuan nimo siya bayaran siya between 1 to 3 years. So, example na niya is home credit. So, tagabuan nimo siya bayaran, but depende na nimo kung kanang unsa ang imong gikuha nga butang, either mahal ba na or dako. Basta tagabuan ang iyang kuan pagbayad. So, another example niya is kanang mangutang ka og motor. Tagabuan nimo siya bayaran and mula siya between 1 to 3 years. And ikatulo is long-term financing. These loans last anywhere between 3 to 25 years. They use company assets as collateral and require monthly or quarterly payments from profits or cash flow. So, ang long-term financing kay mula siya between 3 to 25 years. Then, ang example ani niya is mangutang ka og kanang kwarta sa bangko, either madako or magamay kay kung mangutang ka og karang dako nga kwarta sa bangko. Example, if dili ka makabayad anak nga buwan na. So, ang long term, naa siya collateral. O dili ka kabayad anak nga buwan na, karang depende na nimo kung unsa ang imong i-collateral, either sakyanan, yuta, balay, and etc. Short-term credits kay is a business line of credit with a long term between 6 months and 1 year. Example na niya sa kuan, as a foundation, na sila'y 6 months, na po sila'y 1 year. Then, ari na po ta sa advantages of short-term credits. Short-term credits provide certain advantages to the firm. These are as follows. Number 1, they are easier to obtain. The risk involved in lending funds varies according to the length of payment period. Long-term credits are more risky than short-term credits from the creditor's point of view. Because of this, short-term credits easier to obtain. So, ang short-term credits is dali ra nimo siya makuha. Unlike sa long-term kay mas risky ang long-term kay magisgot naman siya collateral. Kumbaga, mas kuti ang long-term kaysa sa short-term. Then, second, short-term financing is often less costly, in as much as long-term financing involves more risk. Short-term credit is often granted by creditors at less cost. Short-term financing is dili kayo siya ingon nga gasto. Then, mostly po ihatag sa nagpautang is gamay ra jud na ang cost. So, short-term na siya. Then, short-term financing offers flexibility to the borrower. After the short-term credit account is settled by the debtor, he may elect to use the other sources of credit. Long-term financing does not provide the borrower with this option. The debtor is stuck with the terms of the long-term loan for a longer period. So, ang short-term financing is nag-offer of flexibility sa nanghulam. After ang short-term credit account masettle sa nangutang, naa siya'y opportunity or chance nga mopili sa paggamit sa ubang mga sources sa credit. So, silbi kung na-impasse na ka sa imuhang utang, pwede ka makautang o lain nga loan. Kaya ang long-term financing wala maghatag sa nangutang o ilani nga option. Also, na disadvantages ang short-term credits. Number 1, short-term credits mature more frequently. This condition will place the firm in a tight position more often than necessary. A long-term liability, on the other hand, provides the debtors with a wider breathing space for the implementation of finance strategies. 2. Short-term debts may, at times, be more costly than long-term debts. When factors like risk, collateral, general, economic outlook, and the size of the loan are taken into consideration, short-term credits may prove to be more costly. So, the suppliers of short-term financing is provided by the following. So, naasay suppliers ang mga short-term financing. So, there are 7 suppliers of short-term funds. First is trade creditors, commercial banks, commercial paper houses, finance companies, factors, insurance companies, and company approval. So, ang trade credit is na nature. The trade credit is a form of credit extended by a firm to another firm. When the credit is extended to a final consumer, it no longer quantifies as trade credit but as consumer credit. So, ang trade credit is kasi siya ka-form of credit nga ihatag sa lain nga company o gihatag pa jud sa lain nga company hangtod nga maabot sa consumer credit. Dili na siya matawag nga trade credit, matawag na siya nga consumer credit. So, ang trade credit dai guys kay kuan an agreement between two businesses that allows one business customer and a supplier. So, basta timan lang ninyo ang trade credit kay agreement siya between sa customer o sa supplier. Then ang consumer credit kay allows consumer to borrow money. So, na siya. So, naay tulo ka instruments ang trade credit. First is open book credit, second is trade acceptance, and last is promissory note. Open book credit constitutes the bulk of trade credit. Then, trade acceptance, second is a time draft drawn by a seller upon a purchaser payable to the seller as paid and accepted by the purchaser as evidence that the goods shipped are satisfactory and that the price is payable. And the last, the promissory note. It is an unconditional promise in writing made by one person to another, signed by the maker engaging to pay on demand or at a fixed determinable future time, a sum certain in money to or to the order of a specified person or to be bearer. So, mara na ako ang topic sa chapter 7, which is short-term capital. That's all.
Cost of trade credit is a type of financing arrangement between businesses where a supplier allows a buyer to purchase goods or services on credit without requiring immediate payment. This means the buyer can receive the goods or services now and pay for them later, usually within an agreed upon time frame such as 30 or 60 days. So it means that when you have a business, then you have no any kind of finances or to supply your demands on your business. So palit ka og kanang binulto sa usa ka supplier, and then kanang sugot ra siya og credit or utang, and depende niya kung kano saan nimo exact date na humantanan imong bayaran. So 30 or 60 days. Ang nakalindot ba ni is if makabayad ka na og half sa wala pa 30 days, buyer kay mohatag nimo og discount. For example, total cost of your supplies is 50,000, and then ang ihatag niya is like 2%. So 2% equivalent to 2,000. So dako na kay saving. So mao ni ang cost of trade credit. Next is the banking system. Is composed of 4 highly distinctive components consisting of the following. First is the commercial bank. It's where people and businesses can deposit money for safekeeping, borrow money when they need it, and use other financial services like money transfers and issuing checks. For example, ani kay ang BDO, Land Bank of the Philippines, and PNB. The word kanang deposit money for safekeeping kay example ani mo kay BDO. So meaning mo deposit ka sa imong kwartang kailangan i-safety nimo for emergency purposes. So na siya sa savings sa BDO, and then kaning other use or financial services like transfers money. So meaning kanang mobayad ka o kanang mga expenses nimo sa balay like kuryente or tubig. Second is a development bank. So it's a specialized bank that provides funding and support for projects that promote economic growth and social development. These banks often focus on financing projects in areas such as infrastructure, agriculture, education, and healthcare. So example diri sa development bank is the Development Bank of the Philippines, or the DAVY. So, from the word, support projects that promote like economic growth. So, example ini is you have a group of people that is planning to build a school in areas such as bukid-bukid. Okay, you see that children are need to have proper education. So, wala sila room. You go to the Development Bank of the Philippines, which is to have or need funds for your project. So of course the bank itself helps you to provide that. Third is the saving banks. It's a financial institution that primarily focuses on helping Individuals save money by offering saving accounts and paying interest on the deposits. Saving banks encourage people to save for their future needs and goals, providing stable and reliable place to keep their funds. For example, sa anin, BDO, General, BPI, and of course, pinaka-importante is ang Sun Life Pro. As usual, the savings bank, commercial bank have similarities. Of course, they have to save the money, but their differences is that saving banks can focus just sa savings ninyo, saving money to ensure your future. Fourth is a rural bank. Rural banks help support local economies, agriculture, and small businesses, making financial services accessible and convenient for people in rural communities. For example, kay ang One Network Bank, East West Rural Bank. So, from the word support, ang kalahian na nila kay local ang yun ang rural bank. So, meaning, rural bank, masuportin mo, mag-provide of funds if makapasok sa ilang qualification. Like, imong concern is about agriculture, small businesses. For example, ani is skills, need o kanang water supply para dili na kanang diretso na flow in case of El Nino and tig-init. Next is a short-term loan. It's a loan that you take for a brief period, usually less than a year, and repay it quickly, often with higher rates or higher interest rates. Short-term loans are used to address temporary financial needs such as cash flow gaps, emergency expenses, or small-scale projects. There are two types of short-term loans. The first is unsecured short-term loans. They are loans provided for a brief period without requiring the borrower to pledge any assets or as collateral. So example is payday loans, personal loans, and credit cash advances. Alkansi ani is ang nagpa-loan sa borrower kay wala man sila kanang assets, any assets of the borrower. Second is the secured short-term loans. They are loans provided for a brief period, requiring the borrower to pledge an asset as collateral. Examples is auto title loans, pawn shop loans, and some types of business loans. So kani kay from the word secured kayo kay ang nagpa-loan kay na-required siya sa borrower og assets. If the borrower couldn't repay, of course, sa katong gihatag na asset sa borrower, maiyahan na to. Loan arrangement may be considered under the following: a non-notification plan in financing. It's a type of factoring where the customers, debtors are not notified that their invoices have been sold to a third party or the factoring company. Ang debtors or nangutang ani kay wala sila makaibaw nga ang ilahang invoices kay sold sa laing company. Customer nga ni kuan sa original seller kung mapadayon siya kung siya bayad dito. Lastly, a notification plan in financing is a type of factoring arrangement where the customers or debtors are notified that their invoices have been sold to a third party or the factor. In this setup, customers are informed that they need to make their payments directly to the factoring company instead of the original sellers. Ang debtors kay bounded siya ng invoice niya kay na-sell sa third party. So meaning, si customer di na siya mo dito og bayad sa original seller. However, ato na siya mabayad sa the factor or the third party company. Thank you.
Hi, I'm Karl Maquilan from BSHM1B. So, personal finance companies are companies that provide financial products and services to individuals. They offer services such as loans, credit cards, savings accounts, investments, advice, and insurance. Their main focus is to help individuals manage their money, achieve their financial goals, and make informed financial decisions. Receivables refer to the amount owed to a company by its customers or clients for goods or services provided on credit. It represents the company currently assets and signifies the amount of money that is expected to be received in future. So, mo ni ang mga utang nga kwarta sa usa ka kumpanya nga mga nga serbisyo nga gihatag or mga produkto nga gihatag nga wala pa mabayari. Mo na siya ang receivables. Then, account receivables refers to the money that a company is entitled to receive from its customer for goods or services provided on credit. It represents the outstanding invoice or bills that are yet to be paid by the customers, and is considered as an asset or the company's balance sheet. Then mao ni siya mga balancing nga kwarta tungod sa usa ka kumpanya nga alang sa mga butang or serbisyo nga gihatod or gigamit apan wala pa mabayari sa mga customers. So mao na ang account receivables. Then the next one is insurance company. Is a business that provides financial protection to individuals or organization in exchange for regular premium payments. It offers insurance policies that cover various risks such as property damage, liability, health issues, or loss of income. The company assumes the financial responsibility for potential losses or damages suffered by their insured party, providing them with financial compositions or reimbursement as per the terms of the policy. So, mga examples ani is PhilHealth, Pag-ibig, then SS. Mora na siya ang silbi more common nga insurance nga companies. Then, the last one is company accruals. Company accruals refer to the recording of expenses or revenues in a company's financial statement before the actual cash is exchanged. It is a method of recognizing and reporting financial transactions that have occurred but have not been settled in cash. Accruals are important for accurately reflecting the financial position and performance of a company during a specific period, even if the cash flow has not yet occurred. So mga kantidad sa kwarta nga nakuha or nagasto pero wala pa nimo nabayari. So mao na ang sa company accruals.
Corporate stock in Chapter 8. What is corporate stock? So, corporate stock is a type of ownership in a legal business, which is in a corporation. The corporations typically issue stock to raise money from the investors to fund capital expenditures or future growth. And yes, it's owned by an investors that represents a proportionate share of interest in a corporation. And it's also used by a corporation as a way to raise capital. Stock finance. Stock finance, also known as inventory finance, is a lending service that allows business to borrow capital against their goods. It is an asset-based finance agreement in which business access funding based on the exact value of their stock, from raw materials to the finished product. Stock financing is the shares of stock are sold to raise funds for the long-term financing requirements of the firm, and the objective of this is to increase equity capital. Advantage. So, the advantage is, which may be otherwise not be possible for a business that work with delayed payment terms or cannot afford to grow into new territories. Liquid capital. An instant cash boost to avoid bad debt or fund growth. And it's also facilitating international trade with stock finance available for overseas inventory. Capital stock. Capital stock is the interest of the owners of a corporation, and it's also an amount of common and preferred shares that a company is authorized to issue, recorded on the balance sheet under shareholders' equity. Dividends. Dividends is the net income of a corporation may be distributed to the stockholders in the form of dividends, and it is a distribution of a profits by a corporation to its shareholders. Retained earnings. It is amount of a profit of a company has left over after paying all its direct costs, income taxes, and its dividends to shareholders. Classes of corporate stocks. It has two major classes in a corporate stock. First is common stock, and the second is preferred stock. So, how stocks work? Stocks works when a company issues stock to raise capital in the public offering. And next is stockholders sell their shares on the stock market. And the next is member of the public and investors buy and sell their shares. And the next is stocks are bought and sold based on expectation of corporate earnings. And the last, shareholders can make a return on their investment by selling shares of a higher price than purchased, receiving dividends, and through derivatives. That's a stocks works.
Common stock is a security that represent ownership in a corporation. Example kanang ang sa kumpanya may issue sila og 100 share of stock. Nya nay usa ka investor nga ma-purchase og 10 shares. So ang atong investor maka-own siya og 10% sa kumpanya. Mao na sa common stock. We have a variety of common stock. And first is classified common stock. This type of stock that is classified into various categories or classes, such as Class A, Class B, Class C, or etc. Each class of stock can have different voting rights, dividend payments, and other shareholder privilege. Example of classified common stock is the Alphabet Incorporated or Google stock. The company has two classes common stock, Class A and Class B. The Class A share have one vote per share, while the Class B have no voting rights. Next is a deferred stock. It is a type of stock that doesn't receive dividend until a certain date, hence the name of deferred. Example na niya kay kanang sa CALA-OR Incorporated William and Sonoma Incorporated. Mga example sa deferred stock. Next is a voting trust certificate. Voting trust certificate is a document that gives the holder the voting rights of underlying share but not ownership. Example na kanang ganing ang mga board of directors kay magpili na lang sila bagong CEO or sa kumpanya makarang magpili sila baong mo dala sa kumpanya muna ang voting trust certificate. Next is a guarantee stock. It is a type of stock where the dividend payment are guaranteed by third party who agree to pay a certain amount regardless of the company earnings. So next is a debenture stock. Debenture stock is a type of stock that represent a deep security that can be converted into common stock at a fixed price at a specific date in future. So we have two types of debenture, which is fixed debenture and floating debenture. Fixed debenture is also known as the fixed charge debenture. Is a loan that issued against a specific asset. Example, a real estate development company might sign one of its apartment building over as a collateral for a loan. The creditor would in turn restrict the company from selling the property or even leasing unit within it for the duration of the note. While floating debenture which require a borrower to sign an entire class of asset over to the creditor as a collateral. Example ani kanang manufacturing company mahuam sila kwarta from bank. Ang company gamiton nila ang ato ilang inventory as a collateral through floating debenture. Okay, bisag itong gigamit ilang inventory makakaan di ba sa makaproduce sila o makaproduce o makasiling di ba sa mga product. So convertible nabay ka sa akin convertible debenture. Last kay kaning convertible debenture. Convertible debenture typically companies raise capital by issuing debt in the form of bonds or equity in the form of share of stock. Some companies may use more debt than equity to raise capital to fund operation or vice versa. Ang convertible debenture kanang kuan siya. Kanang sige ka isag utang para makapundo, makabayad sila para mo taas ilang kapital inana din sila ang kuan convert.
I am the second to the last reporter in the chapter 9 preferred stock.
Everyone, so I am the second to the last reporter in preferred stock. So mag-discuss ko about sa preferred stock. Ang sa common stock di ay kay si Aiza. So kanang duha ni siya nga klase nga investment kato kay sa common stock o preferred stock. So unsa day ang preferred stock mao ni siya. Preferred stock are company stock with dividends that are paid to shareholders before common stock dividends are paid out. A preferred dividend is one that is accrued and paid on a company's preferred shares. Their dividend payments take preference over common shares. So kanilang preferred stock kani siya nga investment siya nga kaning priority jud kaayo kanang dapat sad kung musud ka ani nga investment kailangan imong budget is kanang dako kay kuan man ni siya kanang take the risk din siya nga kaning investment makailangan jud nga dako imong puhunan kung gamay is gamay ra sad ang imong makuha dapat jud kanang i-maintain nga ato ang imong budget para mo makuan ka ani nga kuan investment. So na di lain-lain nga mga provision ang preferred stock. So mao ni siya claim kuan ni siya kabuok 7 ni siya kabuok provision of preferred stock. So unsa day ni mao ni ang claim to dividends, voting rights, subscription rights, callability, convertibility, participation o classes. So ang claim to dividends di ay is mao ni naa siya duha ka klase. So unsa day ni mao ni ang cumulative o non-cumulative. So unahon na tong cumulative. Ano siya nabilong sa claim to dividends ha. So unahon na tong cumulative. Cumulative preferred stock is a type of preferred stock with a provision that stipulates that if any dividend payments have been missed in the past, that dividends owed must be paid out to cumulative preferred shareholder first. So ang pasabot ani di ay kay kanang
kay kanang example na kay kuwang sa usa ka kumpanya nga kuan kanang bayad, example nag-abang ka dira, then nakay kanang utang. So pwede ra siya nga unya sa nimo bayaran ng utang nimo sa katong pass kanang example ha, 2 ka buwan imong utang. So pang 3 ka buwan na karon, pwede ra to nimo dili sa bayaran ng katong 2 ka buwan. So sa karon sa nimo bayaran, kung human na nimo bayad karon kay pwede na nimo ma-proceed ang kuan para dili ka mapahawa sa kuan ang imong giabangan. So kaning cumulative di is naa siya consideration ba kanang okay ra siya nga madugayon ang bayad ang katong pass. So ang kanidang non-cumulative is opposite pod siya. So ang example katong 2 ka buwan is wala nimo na bayaran. Kung pila ka years wala nimo na bayaran, pwede ka nga ipapahawa or di na nimo mabalik ang imong kuan baka nang negosyo kay ipapahawa naman ka kay wa man nimo gibayaran ang katong pass nga kuan bayron nun. So ikaduha is ang voting rights. So unsa din voting rights? Most preference shares have a fixed dividend while common stock generally do not preferred. Stock shareholders also typically do not hold any voting rights but common shareholders usually do. So ang common katong kang Aiza day katong common shares is moagi pa siya vote una nila makuha ilang dividends. For example kanang Aiza kay kanang kumukuan mato kas investment sa common stock is kailangan pa ka moagi og mga gobyerno ba kailangan pag kanang pirmahanan sa gobyerno aron lang nimo makuha ang imong kanang imong profit. Pero ang kaning kuan kaning kung ari ka preferred stock is dili na siya kailangan kay priority man ka kanang example sa bangko dali na lang nimo siya makuha. Dili na ka kailangan mo mato pa direktor, mato pa kuan mga bisag unsa nga sa gobyerno para makuha siya. So ang ikatulo di ay ang subscription rights. So unsa dinhi? The right of existing shareholders in a company to retain an equal percentage ownership by subscribing to a new stock issuance act or below market prices. So kuan dinhi siya. Example na ay kuan ang company kanang bag-ong kanang product nya kanang moabil ka kanang tagaan kanila og discount pero kanang mubayad gyapon ka sa ilang katong ilang price nga gipangayo. Pero pareha ra mo makuha duha, pareha mo profit nga makuha ba ligo. Non-preemptive right. A shareholder has no control over relative percentage holding between existing shareholders being changed to one shareholders. For example, may gain a controlling stake either alone with others. So mao na to siya kanang ang katong bago nga imong giabil no kay dapat ikaw ra din makakuha ato pero kung sa kuan ka non-preemptive right is ang uban kailangan pa makakuha og kanang product na lain dili na lang mismo nga ikaw. Sa kalabo na ta, sa callability. Bonds that can be redeemed or paid off by the issuer prior to the bond's maturity date. When an issuer calls its bonds, it pays investor the call price together with accrued interest to date and at the point stop making interest payments. Example, a company that has issued callable preferred stock with a 7% dividend rate will likely redeem the issue if it can then offer new preferred shares carrying a 4% dividend rate. Example ano na kabisayon. So sa company kay nakay 7% rate na makuha na dividends. Kung ma-avail ka silang bagong product kay 4% rate na lang ang imong makuha. Sa kaning alin ako sa participation. So unsa din participation? Is a type of preferred stock ay ang participating dahil na ay kasing duha, participation o non-participation. So unsa din ang participation usa? Is a type of preferred stock that gives the holder the right to receive dividends equal to the customarily specified rate that preferred dividends are paid to preferred shareholders as well as an additional dividend based on some predetermined condition. Example, suppose in the common shareholder receive liquidating dividends of $80 per share and the preferred stock calls for payment of not only its par but also the same amount a shareholder of common stock receives. In this situation, a share of preferred stock would receive a dividend of $180. Ang non-participating DI is one in which a dividend is paid usually at a fixed rate and not determined by company's earnings. The last and but not the least is the classes. So also din the classes. The four main types of preferred shares are callable shares, convertible shares, cumulative shares, and participatory shares. Mao to sila nga upat nga nagdalong sa main preferred shares sa classes. Thanks.
So the next is the advantage and disadvantage of preferred stock. So ang atong example lang nino is kaning magkuha kag lisensya like sa fixer o kanang regular nga proseso ng pagkuha sa lisensya. So ang kaning pagkuha fixer no is advantage niya is dali ra siya mo makuha, picture ka din makuha na nimo. Then ang disadvantage lang sa fixer is dako siya gastod, mahal siya. Nya sunod ang pagkuha nga ikay mo process or regular nga pagkuha sa lisensya. So ang advantage niya is less ra mo magasto, gamay ra siya. Nya ang disadvantage niya is hassle, kanang di siya kuan, it takes a lot of time. And the next is, what is treasury stock? So, treasury stock refers to a shares of company's own stock that is bought back from the open market. These shares are considered treasury shares and held by the company itself rather than being available for trading by investors. Treasury stock can be reissued or retired in its presence of balance sheet can impact metrics like earnings per share and the company's book value. So, companies often repurchase their own shares as a way of return value to shareholders or to adjust their capital structures.
So, good day, ladies and gentlemen. We are here to report about bonds. So, there are two types of bonds, which is the corporate bonds and the government bonds. So, what is corporate bonds? Corporate bonds are debt securities issued by corporations to raise capital. You essentially lending money to the issuing company in exchange for periodic interest payments and return of the principal amount at the bond's maturity. So, the next one is government bonds. Government bonds are issued to raise funds for various purposes, including infrastructure, capex, budgeting needs, or debt refinancing. Next one are secured bonds. So bonds are backed up by collateral, secured by specific assets or collateral, providing bondholders with a claim on those assets. And the next one is unsecured bonds. No specific collateral. These bonds are not backed up by specific. Instead, they rely on the issue's general credit worthiness.
Bonds with warrant. The bondholder have the right to buy a certain number of shares at a fixed price in a specific period, usually 5 years. Detachable warrant. You can sell the warrant separately from the security it was initially attached to. You can even sell the warrant separate while retaining the actual bonds. Non-detachable warrant. The warrant cannot be separated from the security it's attached to. You can sell the warrant without selling the bonds. Bonds with junior security attached. It is a subordinate bond and ranks lower in priority than other debts of the issuer. It has a high interest rate or potential return but the lowest priority in repayment and can result in higher potential losses. Serial bonds. It has multiple maturity dates. It can be semi-annually or annually. It can be mature over a period of time. Sinking fund bonds. It can maintain companies by assigning money or save money to pay off an existing debt or bond. It has lower risk, therefore carry lower yields. Collateral funds. It is a valuable asset that borrower pledge a security for a loan. It means an amount realized by the trustee from the liquidation of collateral. Perpetual bonds. It has no maturity date. The indenture. It is that legal document which record the obligations and the terms of agreement. It also contains all the information related to the bond.
So the next one is assumed bonds. So ang assumed bonds guys is when usa ka company is naikutang sa usa ka company, sabi ka nang naikutang sa iyan na company, siya mo ay mobayad sa katong iyang yutangan na bonds. The next one guys is ang guaranteed bond. So ang guaranteed bond guys is magkuhan siya sa tulo ka buok, which is the company, the other company, and also the back sa like example ang bangko. So if ever gani ang ilang mga profits or ilang mga shares ana sa duha ka company is mabutang ana sa ka bangko. And then kung ang usa gani ka company is dili siya makabayad. So ang katong other company na iyang ka share is mao sad siya mobayad sa bonds na ilang So the next one guys is a joint bond. So ang joint bond guys is duha na lang siya kabuok, which is the usa ka company and the other company na nag-share sila. Once gani ang usa ka company is dili siya makabayad sa iyang share, the other company na katong iyang ka share is mao siya ang mukapal usa sa bayaran. The next one is the coupon bond. So example, a 1,000 bond with a coupon of 7% pays, may mo na siya og 70 a year. So technically, this interest payments will be semi-manual, meaning the investor will receive 35 twice a year. The next one guys is a registered bonds. Ang registered bonds guys is ma-indicate na dira ang pangalan sa owner, address sa owner, o ikuha na siya sa into certificate. The next one guys is the income bonds. These income bonds have a face value of 1,000 and a 5% annual interest rate with a majority in years. If you fail to pay your interest this year, you need to pay next year a double. So the next one is ang participating bonds. So what is participating bonds guys? So example, mo invest ka, tas nindot ang imong performance, imong gi-investan. Na possible guys na mo increase ang imong profits ana. Last one is convertible bonds. For example, if a company seek to raise 10 million and the current share price is 25,000, then 400,000 new shares must be issued to reach its capital raising target.